Hi there, welcome to Neppy Invest. So a little bit of a different track in this video because I'll be talking about a mining company. So most of the Appendix 4Cs that I've been doing have been done on non-mining companies. So I thought it'd be good to look at a mining company because even though Appendix 4Cs are released in every quarter, mining companies also release quarterly activities report and quarterly cash flow reports. Not all of them release quarterly cash flow reports, but most of them, if not all of them, do release quarterly activities report. So I thought it'd be good to check out one company I've been following. That's New Century Resources. They are a zinc producing company, and I'm a little bit interested in zinc, and I'll tell you why in a second. So let's have a look at why I'm interested in zinc. So when you look at zinc prices, so I'm a big believer that, and probably shouldn't say believer, but definitely materials, so metals and all that sort of thing, go through cycles. I think that's a given. It makes sense. It's all based off supply and demand. If you have metals like iron ore is at $100 or so, you're going to see more iron ore mining production come online just because you want to see you're going to see miners trying to take advantage of the higher prices in of iron ore. And because you got more production coming online, that increases the supply of iron ore, and eventually the supply of iron ore overtakes the demand. And because you have more supply than demand, of course, naturally the price of iron ore will come off a bit. And then eventually, if it falls enough, a lot of those iron ore producers, especially the high cost producers, will either shut down or shut off production, and that decreases the supply eventually, and that means eventually the price starts going up. So without doubt, metals go through cycles, and you can definitely take advantage of those cycles. I've heard a lot of analysis experts say they don't really buy into miners because of their price takers, not makers. But I think you can definitely take advantage of the cyclical nature of metals and buy at the low end of the cycle, the bottom of the cycle, and sell at the top of the cycle. So always look at trends in metal prices, and this is zinc. So the last 5 or so years, you can see a really good uptrend a few years ago that was broken in around 2018 and then went through a downtrend. And then in July this year, that downtrend was broken and looks like the potential uptrend has been developing. And right now, it's around about a bit of a price of resistance or support, a potential support. And if it keeps going up, I think we'll definitely see an uptrend in zinc. So because zinc's of an interesting time in its cycle, I thought I'd look at the potential zinc players on the ASX. And to be fair, there's not many sole zinc players on the ASX. In fact, New Century Resources is maybe the only one. And if we look at the only one, but I'll get into look at the zinc players globally in a second. So because they're one of the only zinc players on the ASX, I decided to have a look at their operating cash flow, and this did provide me some interest because they are cash flow positive in operations, producing almost $70 million in receipts and cash flow positive to the tune of $6.5 million. Market cap of 161. They do have a fair bit of debt on so you can see interest. So they pay $2.4 million in interest. So they do have a little bit of debt, which is always a concern for me, especially in mining companies. And we've seen Artura Mining go through these problems with having too much debt on their books. So another thing I look at was investing cash flow. So they don't have a lot of money or spending a lot of money in capital expenditure, only $2.5 million. That's what probably plant equipment is. I'd like to see a company break that down into whether that capital expenditure is going towards maintenance or going towards growth. A few companies do that. It's usually, you can roughly assume 50% of capital expenditure goes to growth, 50% goes to maintenance. That's not always the case though. And then financing activities, they did repay $10.3 million in debt. And because they paid $10.2 million in debt, the cash on their books went down from $40 million to $34.3 million. So they still have a fair bit of cash, so a bit of leeway there. So I don't think their high debt won't be a problem for the foreseeable future, definitely if zinc prices remain elevated. So after looking at their most recent cash flow report for this quarter, I just went back through their history, and they might have reached an inflection point this quarter, because if you go back, this is looking at their cash receipts, cash flow in operations, and production and development costs. That's what P&D means, is production and development costs. We've seen them spend a lot of money in development costs in their mine in Century Mining. So it was abandoned for a while, and they've restarted Century Mining or Century Mine in 2018, I think it was. So a lot of money's gone through development of that mine, and you can see the cash flow. They're burning a lot of cash, especially October 19 through April 20. They're burning almost or higher than $30 million in the quarter. That's turned around the last few quarters. So they've gone from burning $30 million in cash to actually producing $6.5 million in cash. Seeing cash receipts starts to pick up too. So it looks like the development costs, the money they put into development have gone through to the bottom line, and they're seeing cash receipts go up. And also the increase in zinc prices have contributed to that too. So in fact, they might have reached that inflection point, which is something I always look for. I've mentioned before, there's not many zinc producers on the ASX. In fact, the top two here, Glencore and MMG, you can't buy those companies on the ASX. Glencore, if I remember correctly, Glencore is Swiss. And they do have operations in Australia, as you can see, but they do have, I do know someone who works for Glencore, funny enough. MMG is the other mining company here that has operations in Australia. MMG used to be listed on the Australian Exchange up until sometime last year. They delisted on the Australian Exchange and maybe only solely listed on the Hong Kong Exchange. So New Century is the 10th biggest global zinc producer, and is also the only sole zinc producer on the ASX. So if you do want exposure to zinc and don't care about any other metals, New Century might be the only play you have on the Australian market. So next thing I look at is always go to charts and see what the charts are doing. So the share price got as high as $1.60 in 2017. So that's before Century Mine went into production. So a lot of hype naturally before the mine went into production. And then since then, that high share price has been going downwards in a good downtrend. And I think that downtrend may have been looking like it's going to be broken soon enough. So that's 3.5-year weekly. If I look at the 1-year daily, we're potentially seeing a bit of a start in the uptrend. I'll get that into the next slide. But we're starting to see the share price form a very wonky looking base, but definitely a base starting to form there where the share price, instead of going down, it's been going sideways. And then if I look at the 3-month daily chart, we're potentially seeing the start of an uptrend. So what you do with an uptrend is just connect the two lows here. So I've just connected the two most recent lows, and that's the potential start of an uptrend. If the share price in the next few trading days gets down to about 15 cents or so and then bounces off that, that would actually confirm this short-term uptrend. So potentially a good time to buy at 15 cents would be sort of a risk-free price to buy in, because if it goes lower than that, that would be, you just sell out straight away. And then if it bounces off that, that would confirm the development of a short-term uptrend. So that's all I've got on this video of New Century Resources. When I first started investing, I wasn't really interested in mining companies, just because, again, the perception out there that they are price takers, not price makers, drew me away from them. But I really believe that you can take advantage of the cyclical nature of metal prices and use that to your advantage. You do quite well. For instance, Fortescue bought that at $3, and now the price is not $18. I remember a lot of people, when I bought it at $3, were saying, no, you shouldn't buy it, it's too risky. And I'm pretty sure that a lot of those people who are saying it was too risky at $3 are probably saying it's a good time to buy at $18. And those are sort of investors who buy at the high and sell at the low. Anyway, that's all for now. I'm not an expert in this mining. I'm learning a lot as I'm going through time, and always learning. And because I'm not an expert, you shouldn't take my advice. If you need to seek professional advice, make sure you seek out someone who's qualified. So that's all I've got for today's video. Have a good day. See you later. Bye.